Hey everybody, Boris for PK Forex. Welcome to the COM Dollar technical wrap-up for the week of March 6th to March 10th for Aussie dollar, dollar CAD, and Kiwi dollar. Interesting week in the COM dollars as well this week. There's a lot of event risk as well as, of course, counter dollar trading as we go forward. Let's take a look at the calendar first, and then we'll look at the levels. On the calendar side, obviously, the Aussie data leads the way with odd RBA statement, cash rate, retail sales. It's unlikely that the RBA is, I think, going to be any different from their prior stance. Certainly, they moved off, I think, any idea of lowering rate hikes because the GDP numbers were relatively decent, especially if the retail sales come in relatively okay. I think the RBA is pretty much going to communicate that they're quite okay with the rate hike as where it is. That doesn't necessarily mean I think that the Aussie is going to be supported because the interesting thing here is, of course, the Aussie has been weakening last week despite relatively decent Australian data because a lot of the carry trade outflows, U.S. yields is the primary driver of where Aussie is going to go. If U.S. rates go through the 2.5 barrier on a 10-year, meaning that U.S. yields begin to start to reflect a more hawkish reality of the Fed, you'll still see lots of carry trade drift out of the Aussie. And that's likely going to cause it to crumble a little bit more as the week continues. On the Kiwi side, there's the GDT price index. Not much else is there. Kiwi has actually been relatively weaker. On the Aussie side, by the way, too, the Chinese trade balance data is going to be very key. There's a big variance between the prior and this month's forecast. We'll see how. I think the critical thing on the trade data, of course, is going to be just how much of a decline in imports they're going to have, because it's really a question of where the Chinese demand is much more than Chinese external export-driven numbers. But both will matter. But the imports will be, I think, the more critical thing. If the imports really start to shrink, that could impact Aussie as well, because of course Aussie has been skating on the assumption that despite the slowdown in the Chinese economy, it's not a collapse in any way, shape, or form. So demand out of China still remains a very key tell for both Aussie and the Kiwi as we go into the week. And then last but not least, of course, CAD employment data. The BOC was considerably more dovish in their statement. That's pushed dollar CAD now higher away from the key support levels. We'll see how the employment data shapes up this month. If you look at the actual, let's just look at historical data. It's been quite good. I mean, if you look at the employment numbers, we haven't had a negative employment report in 5 or 6 months, and they've all been very healthy in the 30s to 40s range, which is quite good for the Canadian economy. So we'll see how well that prints, and whether that could be a support for CAD. But for now, all the COM dollars have been on the back foot, and certainly all the levels in the COM dollars have slipped. So let's just take a look at the levels this week. They've all gone down. 77 now is resistance, support is 75. With CAD, the 130 is no longer a support area because we've moved off that level. Now it's a 32-34 trade. And with Kiwi, it's a 70-72 trade. Again, we moved down on those levels as the week progressed. We've certainly gotten weaker all across the board. Let's take a look at the charts here in more granular fashion. So here's the Aussie. The big, it's been a very low vol trade. It's actually, if you think about this, it's astounding at how low volatility this has been. If you think about this. This is effectively, what is it, 76? This is 77. If you think about this, look at this. This is a 1 penny move. 1 penny move for a full month. I mean, we've had days in the Aussie trade where we've had 2 penny moves in a matter of hours. So this is a full 20-day, maybe 25-day period where the whole pair has been circumscribed by the 77-76 barrier. We broke down to the downside, which I think pretty much clearly tells us that for now you have to very much work under the assumption that 77 again is a major resist point in the Aussie, and this has now become a quadruple, quintuple, sextuple resistance area. But the downward drift here is going to be met by the support, relatively decent support at the 75 area. So Aussie drifting to 75, probably a pretty decent pickup here for a small bounce. It's certainly sell the rally trade into the 76, 77s, unless there's something drastically different about how the dollar structure is going to go. It's unlikely because all the data in the U.S. and the rhetoric in the U.S. suggests that U.S. rates are going up, and that's going to be the primary determinant of where the Aussie goes. But Aussie either is a sell on rallies into the 77 level or a buy on dips at the 75s. In the meantime, it's just sort of in the no man's land as far as trade goes. On the Kiwi side, same kind of a thing, but a sharper breakdown. And again, we're coming into this very, very key support at 70 level, which has been a pretty decent support. And we did bounce off the support here for the time being. But Kiwi is basically a sell the rally, very much a sell the rally trade from a technical point of view. Because if you look at the Kiwi on a longer term basis, what I think is fascinating here is, first of all, even if you look at these highs, it's a failure of lower highs on a longer term basis, and then a much more discerning and concerning failure if you're a bull at the 72 level. So for now, you basically have to just assume that any kind of bounce into the 71, 70, 71.50 is pretty much a failure back down to towards the 70s. A break of the 70 definitely opens up the way towards the 69, at which point that is a pretty decent support here. And you could probably try to make some bargain hunting bids at the 79 level. So Kiwi is perhaps the most pronounced of the sell the rally in the COM dollar trades. And dollar CAD really turned itself around to the negative, or to the opposite side for loonie, negative side for the loonie, opposite side for the dollar. I really thought that this 130 was going to be a key break. It didn't break, and once it didn't break, and then the BOC got dovish, you could clearly see a big move. Now, the only thing that sort of makes you hesitate about this power move is this 34 resistance point. But the 34 resistance point is very minor. The really big resistance point is 36. So it's fully possible that we run through the 34, 35. I would say 35 is going to be a big psychological level at which Caddy probably could find some resistance. But until that point, one of the more interesting trades I think this week is actually dollar CAD to the upside or any kind of a retrace. Generally, especially when you look at it now, when it made this big break to the upside, it made it off a higher low, which suggests that any kind of a drift lower towards the 33 or 32 is going to be a very good buy because it's going to hold and we're going to resume the rally. So buying the dips in dollar CAD, yet another probably a very intelligent trade here as the week progresses. Wish you guys the best luck, the best trading. Boris, over and out.